and the closure of the Pongal festival being very close to us, we have here with us CA Pramod Jain, the Central Council member from the northern region. May I request him to please come and occupy his place on the dais. Esteemed friends, all of you have come for this topic, which is the standards for non-corporate entities, which has become mandatory from the accounting year 2024-2025. CA Pramod Jain comes from a firm of chartered accountants from New Delhi. His father was a chartered accountant. He is a chartered accountant, and of course a very esteemed chartered accountant, I must say. His daughter is a chartered accountant. His son-in-law is a chartered accountant. His firm, Lunawat and Company, which is established not only in New Delhi but also in many other cities of India. Generally, they say that West is the commercial capital of India, East is the cultural capital of India, South is the intellectual capital of India, and North is the political capital of India. That means they know politics better than anyone else, or if little exaggeration, they know only politics. But then look at Pramod Jain. Of course, he is an elected member. This is the third consecutive term he has won the Central Council election. We congratulate you, Pramod Bhai. But sometimes they say in English, isn't it? Looks are deceiving. Looks are deceiving. His elected position may be because of his popularity, acceptability, but then certainly it is because of the command that he holds in the subjects of direct taxation, accounting standards and auditing standards. So at the first rate, don't go by North is political capital of India. Here is one man who defies that. But again, my reading of him went wrong. Looks are deceiving. He met his wife in his own office. You correct me now. In the college, it seems. No, I just looked at him. How can you? The Kadhalikka Neramil or cinema part 2. It has come. There is no time to love. That's a movie which has come. And this man, sir, how sir? So looks are deceiving. So you will find him such a big expert in the subject today, and I can challenge no one will get up from your seat and walk out, because he is one man who's also been reading and speaking on this subject quite often. When you travel with him, you will know not even 5 minutes his phone is free, because someone keeps calling him on even some small doubt also, and he has to answer that. And today, while coming in the car, I felt so proud that a Central Council member can talk like that. I felt so proud. Someone had called him, and I think the conversation was on, and the other person would have started, sir, I am not getting bank audit, please get me bank audit. What he would have told, okay, I'll see. No, no, I'll get it, I'll see. Dekhenge, karenge. Don't worry, send the details to me. You know what he said? What bank audit? Even my firm I am not getting for 5 years. You get me one, then I'll get you. And his firm is again category 1, a central statutory audit eligible firm. So people simply, a central council member, you will get bank audit, you will get become, no. Because we are so busy in our own work that if it comes, okay, otherwise no. So Pramod bhai, I felt so proud and my preference for you went up. Ladies and gentlemen, before I request him to come and expose his brilliance before all of you, may I request Vinod Modi, the chartered accountant seated there, the former president of Association of Chartered Accountants, please come here and greet him with a bouquet of dry fruits. May I also request the former Rotary District Governor of Rotary District 3230, my very good friend C.A. Babu Peram. 2 years before he was the Rotary District Governor of the District 3230, a very vibrant and very excellent district in this part of the country. May I request him to please come and adorn him with a shawl. Sir, the floor is yours.
Thank you very much, Rajendra bhai. A very, very dear friend and my council colleague, though of course a senior in my council because he has been there for this 4th term and I am for my 3rd term. C.A. Rajendra Kumar P. from your own city, Chennai. And in absentia, the other council member from your city, Shri Priya Kumar, the SIRC chair in absentia. अभी नज़र नहीं आ रही, शायद बाहर हैं, आ जाएंगी अभी. She'll be back here some minutes. Geeta ji, and of course the secretary Subha ji and all other things. You know, it has been a pleasure to be with my very dear friend Rajendra Kumar ji for the last so many years, and especially since last few days, even today, because you must be knowing that he has contributed immensely to the profession, to the council. I don't know whether all of you know about him or not. Relating to his contribution to the council, he has been there in the disciplinary committee of the council for the 4 years, and in board of discipline for 2 years. So disciplinary mechanism, out of his total 9 years, 6 years in disciplinary mechanism. So he knows ins and outs of how the disciplinary system works, when a member is to be punished, when he can be relieved. Few days back when we were discussing, he told one of the points, like in the cooperative societies there are a lot of complaints which are raised against the chartered accountant. So in one of the cases he was just discussing with me that one of the chartered accountant, he raised, one of the members of the society raised a complaint against that chartered accountant for the financial statements not properly audited and some other things. So he at that time asked at the bench, did you attend the AGM? Did you question the financial statements at the time of AGM? So just looking at that, whether he had that opportunity to say something at the time of AGM or raising those questions, which he did not. Then when you did not do it, why you are doing it now? So at that, such things, because everyone is after chartered accountants. Everyone is after chartered accountants. So a logical head has to be there, which is there, and doing great work, Rajendra Bhai. Thank you very much. Examination, legal directorate, so many work he has done. So really a blessing that I have been able to have many things learning from him in my this journey of my council. Can I have a cordless mic if possible?
Be better. Okay, now friends, we'll try and do most of the things practical. Theory very less, but yes, practical most of the time. What is the journey of accounting standards in India? The whole journey of accounting standards in India. Very important for all our members to know about it. Very important. How it started basically. In 1977 in our country, the Accounting Standard Board was constituted. Prior to this, only the general accepted accounting principles were being followed to prepare the financial statement. So after ASB being constituted in 1979, for the first time the standards were notified by our own institute, ICAI, the preface to the statement of AS and AS1. And in the country, for the first time, accounting standards were made mandatory, AS 4 and 5 in 1987 by ICAI on members. There was no government involved. Only on ICAI members, that whenever they have to conduct an audit, they have to ensure any audit. They have to ensure that the financial statements are in compliance with the accounting standards. And then the accounting standards journey started in India. In 1991, further standards AS 1, 7, 8, 9, 10, 11, they were all notified. Right? In 1998-99, for the first time, Companies Act, they recognized the accounting standards, and the Companies Act was amended to state that the accounting standard issued by ICAI has to be followed by all companies, by ICAI. And in 2006, they notified all the standards, taking all those from the recommendation from the institute. In 2006, that is we call Companies Accounting Standard Rules 2006. And then, of course, more accounting standards were issued, and when in the UN our Honorable Prime Minister stated that we would be converging with the IFRS, then in 2011 we started, okay, ICAI will take a lead so that the IFRS are implemented in India. And in that way, for the first time in 2011, the process started, the converge, because there was two options. Most of the countries are following IFRS as it is, but India opted, looking at the local conditions, that we will not adopt IFRS as it is, but we will make the required changes as per the conditions prevailing in our country. So certain carves in, carves out, they all were made, and Ind AS they are called, everyone knows, right? So in 2015, the company's Indian Accounting Standard Rules 2015 were notified, and the standards, they keep on amending, so on. So in 2023, when I was 22, when I was made the chairman of the Accounting Standard Board, I thought that yes, lot of work is happening on the Ind AS, but majority of our practitioners have to follow the accounting standards and not Ind AS. Is anyone of members present here are doing an audit of a listed entity? Very less. So most of us are auditing the financial statements or preparing them in compliance with the accounting standards of the audit company. So we will be talking about only accounting standards and not IFRS, right? Then, I was going through so many branches, and they said, sir, we know that the financial statements have to be prepared through in compliance of account. So we started this accounting standards day, and also so many other things. Preparing the format, we'll be talking about that. So we did all that. Now if I talk about various regulators, in 1999 the Companies Act recognized the accounting standard issued by ICI. The SEBI, they said all listed companies have to comply with the accounting standard issued by ICI 2001 unless Ind AS came, right? IRDAI in 2002 said all insurance companies have to comply with the accounting standard issued by ICI. Till date they are complying with the accounting standards, not Ind AS. All banks, Reserve Bank 2003, they said that all banks have to comply with the accounting standard issued by ICI, not Ind AS. So insurance and banking are still complying with the accounting standard issued by ICI, right? So all regulators, they say financial statements, to give a true and fair view, have to comply with the accounting standard issued by ICI, right? Now as regarding companies, I said Companies Accounting Standard Rules 2006. Do you know that in 2021 it was amended and it is now Companies Accounting Standard Rules 2021? Are you aware? Because what we normally do, we copy paste the notes to the accounts. So kindly check the notes to the accounts of the companies whether it is mentioned Companies Accounting Standard Rules 2021 or 2006. Because if it's still written 2006, in your audit report we are saying that the company is complying with the accounting standards as notified under section 133 of the Companies Act. So you will be grossly negligent that though you are saying it is complying with section 133, but the new standards are 2021. So please kindly check and see, because we are copy pasting, we practically see very less into the notes of the accounts. What I am tracking is totally practical. So please try. So whatever you kindly note so that you can tell your office to check and improve. Right. Now, in case the companies are not complying with the accounting standard, because in two Companies Act 2013, section 129 subsection 5, they said the Act 2013 gave more emphasis, more compliance on the accounting standard. They say the financial statement has to be accounting standard compliant, and in case they are not compliant, then the notes to the accounts, financial statement has to disclose the deviation, the reason for the deviation, the financial effect arising of the deviation. Is this being done for all the companies? For all the companies which you are auditing are AS compliant? They have to see the impact and notify. Chartered accountants are different, they are not laymen. For them only our audit reports are there. For them only auditor's report is there, na? Ah, right. Yes.
Suppose I am farming or government investment company, how I can know what is the impact of that non-disclosure?
So, if you have read the auditing standards, if there is a non-compliance, you have to give the impact thereof. So it is the duty of the auditor to see, to report. That's why the audit report is important, na? Right? So now, my question here, are those financial statements reflecting this deviation? Let me give a simple example. All companies have to get the long-term employee benefits gratuity to be done through actuarial. So the companies which you are auditing are doing that or not? Is this disclosure being made? Are you reporting in the auditor's report? In the auditor's report, some are doing, some are not. Tell to your clients that if you don't do, you should tell them what is the non-compliance penalty. The penalty on the managing director, the whole-time director in charge of finance, the CFO, any other person charged over the board, if no one, all directors, imprisonment up to 1 year or fine, minimum 50,000, maximum 5 lakh or both. Just tell them, please comply, otherwise this is on that, you. But we, when we are reporting in our auditor's report, we have to mention what are the non-compliances. Right? Now, For the companies, this 2021 applicability, they have divided into two, the large and the SMC, small and medium sized company and the large. And this applicability has been amended with effect from companies accounting standard rules 2021. More than 250 crores turnover or borrowing more than 50 crores, they would be, actually it is written 250, I will amend it, it is 50 only, right? Borrowing 50, right? So that is large, and other than SMC, if I talked about SMC, no, it is right, sorry. Other than SMC, it is 50 crore turnover, borrowing 50 crores and turnover less than 250 crores. So most of your clients would be SMC, right? And if your company which you are doing an audit is an SMC, is this disclosure given in the notes to the accounts? That the company is SMC as defined under this rules, accordingly the company has complied with the accounting standards applicable. Is this note being given in the notes to the accounts? It is mandatory. It is given in the general instructions. This paragraph I have quoted from there. It's saying if the company's financial statements are of an SMC, this paragraph has to be mentioned in the notes to accounts. Please start doing it if you have not done. Please start doing it. Right? Now, let us go for the case of a tax audit of a proprietorship partnership LLP. Proprietorship partnership LLP is a non-company. Now here in this case, when we do a tax audit, in that tax audit, whether do we audit the financial statements of those proprietorship partnership also? While we do a tax audit of a proprietorship partnership, do we also do the audit of its financial statements? Yes? Sure. We are doing or it is being done? Are we doing or it is being just get done? Just like in the old times when the trial balance used to tally, when there was no computers, we used to say audit is done. Nowadays when we say the financial statements are prepared, the audit is done. I suppose if we can stop this video, that would be better. Because what we might be talking mandatory. Income tax act, there are accounting standards. That is not for preparation of financial statements. That is for computation of income. So, for proprietorship partnership, are accounting standards mandatory? No. Yes. We started with the first slide, how accounting standards were made mandatory in India. If we have a doubt whether accounting standards are mandatory on proprietorship or partnership or not, then there is a huge issue for the whole profession. First of all, let me say the accounting standards are mandatory on any audit we do. Proprietorship, partnership, trust, society, whatever LLP, they are mandatory, please. Not from today, from 87. From 87. This is the main difference between a non-chartered accountant and chartered accountant. A non-chartered accountant have not studied the accounting standards. We have studied, though we are not emphasizing upon that, but the moment I am telling you, you will get that within few minutes. Because we have studied it. So there is a difference between a part-time accountant and a chartered accountant, and that can be known only through our work, through our knowledge. And yes, in case they are not complying with the accounting standards, are we qualifying our audit report? Till now we were not even knowing whether they are mandatory or not. So the question of qualifying the report is not there at all. Please understand. So So when you are preparing a financial statement for the purpose of tax audit, that becomes a general purpose financial statement. You cannot say, no sir, kindly check. No, no, 1 second. It is written to the income tax department. Is it written to the income tax department? Is it written to the income tax department? Sir, the bankers are not using it, na? Bankers are not using it, na? For bankers, so bankers are preparing something different. For bankers, you are preparing something different, na? I'm just asking. So, what do we want? So, what do we want? We want these financial statements should not be complying with accounting standards, because we are saying that it is true and fair. Are we saying it is true and fair or not? So, what do you mean by true and fair? Unless it is complying with accounting standards, how that is true and fair?
I say it specifically reference to financial statements are available in the income tax return form.
You are not right. Kindly show me 3CA, 3CB, what you are saying, it is written there.
So I can give a observation.
You can assume.
And give an observation.
But what is the printed reporting format? Is it written there?
It is not different. That you can give a
So, are you giving?
Yeah.
You are giving that it is not true and fair.
No, I don't say it is not true and fair. There I say this was prepared only for the purpose of complying with the income tax.
But whether it is true and fair or not?
Subject to this only it is true and fair.
Okay, subject to. Like subject to, we are saying debtors, creditors, loans and advances, inventories, everything is not correct.
No, what I take this.
So,
Format, accounting standards, accounting policies.
Are there any formats under the Income Tax Act for the financial statements?
Form it is there, sir.
For the financial statements?
No, for income tax return form it is there.
Sir, income tax return contains the nomenclature of FBT. Are you using that? Are you using that? Are your financial statements having those same nomenclatures?
So in fact, no.
Entertainment.
Format is there, income tax return and the balance sheet.
Sir, then kindly improve. Kindly improve. Because when we issue an audit report, I have to be very careful. Now, why I am trying to say this? Based on our audited financial statements, all stakeholders are relying, whether it is tender, whether they are bankers, whether they are income tax authorities, whether they are creditors or empanelment, whatever it may be. And please understand that if you are not qualifying our audit reports, then they would say there is no need for audit at all. I will give you a very small example. The call is yours. I will give you a small anecdote. The call is yours thereafter. Now let us take a very simple case where suppose there is a new colony cut in the outskirts of Chennai, a huge area, say 100 acres, and it is cut into plots, each plot of say 1000 square yards. So there are 25 to 25 rows, and in each row there are 25 to 30 bungalows. All posh people come out there, they construct it, they start living there with their families. But because it is a colony where anyone can enter from anywhere, lot of wrong things started happening. Thefts, drugs, so many illegal things started happening. So the residents thought, we have to ensure that this does not happen. So what did they do? They formed a RWA. And they said, okay, in the RWA they decided we want the full security. So say money is not an issue, all are very affluent. Say let us put security guards in every row, 2 security guards for the day, 2 security for the night, 100 security guard, best quality, money is no issue. So they put those security guards. So after putting the security guards, they asked, okay, what is the impact now of keeping those security guards? After 1 day, they said, yes, it is better. After 2 days, they said, yes, it is now good. 1 week, very good. 2 weeks, very good. Some small thefts were happening, but they ignored it as very, very petty one. Let us ignore. 1 month, very good. 2 months, very good. 1 year, they said, yes, everything is fine. 2 years, again they said, very fine. 3rd year, very fine. Again, the RWA met. they hired a professional chartered accountant. They kindly look into a financial statement, we need to get them audited and suggest what are the improvement. They said, okay, the main cost is of the security. There is anything wrong because they had built those fences and gates and everything. No, now everything is fine, this cost is too high. Everything is fine. So let us reduce this cost. Very logical? Logical or not? Yes, government is also thinking on the same way. So all financial statements, true and fair? Yes. All are true and fair. And whenever they pick any financial statement, they find anomalies that the auditors were not able to find it. So why there is a need of an audit? Kindly think. I am knowing that it is not correct, still I am not reporting, then where is the need of the audit? Kindly think again. The limits are going up and up, thoughts are going on to removing all the audits. Unless we improve upon this, the issues are going to be tough. So my earnest request, it is our monopoly, and to maintain it, we have to improve. What I am talking here, I have been talking all over the country over past many years. But when I go to the department, I tell them that we are improving, even to the MC everywhere. But yes, everyone has to play a role, not an elected representative, because we say ICI. What is an ICI? To your client, all CAs are like you. For everyone, CAs are like you, to whom they meet. So that is a brand. Everyone is a brand ambassador, please. Right? So please, wherever required, don't hesitate, qualify. Qualify. Improve the preparation of the financial statement. In Chennai, do we get the financial statements when the management prepares? I am talking about again non-corporates. Do they have their in-house accountants or part-time accountants, someone outside or some other professional doing it? Part-time accountants. And they say, sir, whatever financial statement we will give, the auditor will sign. Please understand, if we have to make an impact, we have to tell what is right, what is wrong. There is a difference in the knowledge between a CA and a non-CA, and that we have to demonstrate through our knowledge. There is no other way out. Right? So we will be talking upon what is the right way in the preparation and presentation of the financial statements. Certain small points which we can easily improve, and you will get that within few minutes when we are talking. Right? Sir, if there is non-compliance, where to report such non-compliance in the case of proprietorship partnership? Where to report such in where? Which audit report? Huh? Kindly go through for non-companies Form 3CB. Form 3CB contains 2 paras where you can give your observation. One is para 3A, one is para 5. Para 5 is for anything you want to say for 3CD. Para 3A is for financial statements where you give true and fair view. True and fair view. Financial statements, true and fair view, 3CD, true and correct. Kindly just go through 3CB. Actually, we don't read the audit reports. So it is written for the balance sheet, for the profit loss, true and fair view, subject to this. So there, anything which you want to say for the financial statements, put in there. Put in there. For example, this year, invariably, in all the audit reports of proprietorship partnership, when there was a non-compliance of my MSMED Act 2006, the interest was not provided. Because non-providing of interest renders my financial statements not true and fair. So we had put that in my 3CB para 3A, that the interest on this has not been provided, amounting to this much amount, reflecting into my increase in profit of rupees so much. My role is finished. Income tax has no issues because that interest is never they say not allowable as a deduction. So I am safe, the client is safe, the department is safe, and I can say we are doing our work diligently. But then I have to write in my audit report. My report is audit report, right? No. It is not about demanding. You read the MSME Act 2006, mandatory to pay even if you ask or not ask. So it is now as per act. ना ना ऐसा नहीं होता. It is not about customer is asking or not. As per act you have to pay. It is mandatory. It is a regulatory provision. So as an auditor I have no option. The client is having an option. He says I won't be providing. Very fine. As my auditor I have no option. The law says I have to qualify. He is also fine. I am also fine. But if I don't qualify, the only thing which will come is on us. At that time the client will say, had you told us, we would have done it. He will always say that. He will always say that. Right? Now, as on date, when we are talking today, the accounting standards applicable in India are for companies and other than companies. For companies, the company's accounting standard rules 2021 27 standards. For certain companies, Ind AS 40 standards. Ind AS is applicable to all listed companies, all companies whose net worth is more than 250 crores and above, and their holding subsidiary and associates. So overall, those companies have to comply with the Ind AS, and all other the companies accounting standard rules 2021, and other than companies, everyone has to follow the accounting standard issued by ICI, and these two, the companies accounting standard rules 2021 and accounting standard issued by ICI are nearly same. Nearly same. I feel in India around 50 lakh audits are being done annually. 50 lakhs. So as per your guess, how many entities have to comply with Ind AS? Numbers. Any rough guess? 50 lakh overall audits in our country, which is humongous worldwide. 1 lakh. Hanji? 10,000. Okay. So 1 lakh 10,000. Any other guess? It is guess. 5,000. Do we know how many listed companies are there in our country? 7,200. Right. So in our country, the Ind AS companies who have to comply with the Ind AS are 27,000 out of 50 lakh. Out of 50 lakh. All others have to comply with the normal accounting standard. So we are talking about the general public, not the elite class. Right? Now, there is a change in the applicability of accounting standard for non-companies with effect from 1st April 2024, the current ongoing financial year. Earlier there were 4 levels, 1, 2, 3, 4. Now there are 2 levels. One is large and second is micro, small and medium sized entity. So there is a huge relaxation, I would say. 250 crores and above turnover, large. Less than 250 crores turnover in the last year, it is MSME. Small and medium sized, micro, small and medium sized entities. Right? And borrowing limits more than 50 crores and less than 50 crores is MSME. So this year onwards, many of our entities would be MSME. Earlier they could be under level 2, 3 or 4. So what we have done, already done, is that those the exemptions which were available to level 4, they have been made applicable to the MSME. So more relaxations. More relaxations. Right? Just to inform you, in case your entity which you are auditing is a MSME, then just like companies in the proprietorship partnership LLPs, this note is required to be mentioned. Right, it is my MSME entity and we are complying with the required relaxations. This is given in our general instruction itself. The same wordings I am taking, right? Now, format of financial statements, if I talk about, yeah. That is, you are talking about MSMED Act 2006. It is not there. This is all. This is not MSMED Act. This is, I am telling you, for the accounting standards in general, not MSMED Act. Right? Oh, MSMED itself is a huge subject. I have delivered. You can see my any YouTube video on MSMED. You will get that. So, format of financial statements, if I talk about, for the companies, it is of course Schedule 3. And for other than companies, we have tried and built in your own ICI for the non-companies. We will be talking about those formats also. So, for the companies, if I talk about Schedule 3, Division 1 is for the companies who are falling with the Companies Accounting Standard Rules 2021. Division 2 is for India's compliant companies, and Division 3 is for NBFCs who are following the Ind AS. So, our normal assessees, clients, would be following the Division 1 of Schedule 3. Sometimes we always ask, is there any change in the formats for the companies? You need not go to anyone else, go to the Schedule 3 Division 1. Right? Now, going for the formats of the financial statements for non-corporate entities. This is there, the balance sheet. How many of you have used these formats in the last year? Some have used. Some have used. So why? So those who have not done, why we have not done? So only when it is mandatory, then we will do. Otherwise not. So accounting standards were mandatory. Were you doing? So 43, your MSMED Act interest provision you were doing since 2006. It was mandatory, na? So when it is mandatory, I am not doing, and I am not doing because it is not mandatory. You please take one call, not as per our convenience. You know what happens? Why we brought this? Of course, it was. If you like it or don't like it, it's my brainchild. I have brought it. I am the Accounting Standard Board Chair. Last 3 years I am the chair. Currently also I am the chair. So there was a thought process in my mind that what happens normally, we talk about the bigger firms, top 10, 20, we call big 4, but top 10, 20, all work they are getting. We are not getting. Why? Because we feel that if we see today, if we get an audit of Reliance, can any of us here do it? So how to build that capacity? How to build that capacity? Unless we go a bit and all our members, the SMP, I am also an SMP, if we improve our accounting and preparation of financial statement audit, so we would be ready. But now what was happening, that for proprietorship partnership which constitute our major clientele, anything which accountant, part-time accountant brought, or even if some of us were doing it, we printed from the tally or busy and uploaded that. Even we saw sometimes that being in the case of companies. You know, these previous year figures, they are mandatory since year 2000. Mandatory since year 2000. It is not this year. How? Which law? Again, the framework for preparation and presentation of financial statement issued by ICI. It says previous year figures are mandatory. Even Schedule 3 is based upon that. It is mandatory. My contemporary and my seniors would recollect at the time when there was no computer, there were sheets on which we typed the financial statements and which contained the current year figure and the previous year figure. At that time, we printed those previous year figures and current year. But then slowly the thought process started, why to give more information to the income tax department, so omitted the previous year figure. And we thought that is the right way. Same thing is for audit trail. Now audit trail also same thing na. Earlier the books were prepared in the hardbound my ledger cash book. So any correction we used to pass a reverse entry or journal. Then came my those hard binded books. In that we got that leaf one, the black folders or green folders with the key. We could replace the page. Right. Then came my computers. So when the computers came, we made an entry, deleted it. We thought that making an entry and delete it is a normal thing. But it is not normal. The original thing was, if you have to correct an entry, you have to pass a journal entry. Rectification. So that is audit trail. So the things which are coming, feeling that it is something new, but it is not new. That is the right way to do it. Right way to do it. Right. So these previous year figures were mandatory already since last 25 years, and there is nothing but classification of asset liabilities into current and non-current. Schedule 3 already we are doing for the company. So my thought process was that first of all there has to be a standardization of financial statement throughout the country. If India is going to become top 3 economies of the world, unless that small and medium enterprises understand the concept of accounting standards, financial statements, the importance of that, and that can be done only by chartered accountants. So we all need to play a role into that. They of course don't want these formats because it is tough for them to understand. Please understand, once you prepare it, they would be always coming back to you to make them understand. So then only we will be required. Please understand that. So please embrace these formats. This is good for the country as whole, for the profession, and for your own, because any moment you are preparing those SMEs, the small and medium entities, to grow big. Because once they start understanding, our benefit is only whenever client grows. The moment we say him, okay, keep your profits lower, don't, if your turnover is crossing 2 crores, have another entity, we are harming ourselves. We have to improve his thought process to grow big. We have to tell him, okay, your turnover, if it is less than 50 crores, 25 crores, don't come to me, my associate will be handling it. If they grow, we will grow. This is the fact, please understand. If we start paying taxes in few lakhs or crores, then our fees would also rise. If he is paying some thousands in taxes, how will our fees rise? Please understand, we have to make them grow, make their heart more open. They will grow, we will. Right? These are the formats. I am not talking in detail about this format because everyone knows about this format. Yes.
How will we, say it, what is the capital account and what is the reserve surplus?
Right, good question. Now, what happens? These formats have been prepared considering the proprietorships, partnerships throughout the country. Your clients may not be having those, but there are certain entities who revalue their assets, and they don't want that to be added to their proprietorship capital account or partner capital account. They want as a revaluation reserve in the reserve surplus. Or take a case of a partnership firm where partners agree that for the next 5 years will not distribute the profits. So where will they keep those profits? So that will go into reserve surplus. In your case or anyone's case, if certain line item is not there, remove the whole line item. In every case, even in the case of companies, I have seen various financial statements they copy paste the whole format, and except for the 4 lines, all are dash, 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 dash. Again, I have already said, if both items are nil, remove that line item. 100%. You see any listed entity, they are not having all the entity. So, say a financial company or say a service company will not have inventories line, na. So it is allowed. You see our guidance note. It has to be a good financial statement where no excess information is there. Crisp. So whole line item you can remove, right? So these things we have to tell to our clients. Okay, this is not required. Remove. Yeah.
Now, initially you discussed that the financial statements are prepared with us, the management. We are not mandated by this law. Specified, we are mandated. But the assessment statement, I don't want this format, I want only debit credit format, assessment and liability.
You qualify.
You just qualify. If you will start with
It depends upon how you convince your clients.
yeah, this is only for the growth aspect. This is
Growth aspects. You know what happens? We feel that clients don't talk among themselves, but the fact is they talk much more amongst themselves. When they go for a walk or they meet in their clubs, they say, sometimes they say, what is your financial statement of this? Oh, our financial statement, see, current year, previous year, this format. Your CA doesn't know. He is old. He is not up to date. He'll talk about not old, I will say he is not up to date. So he will take a pride. I am the latest. I am having the latest. We have already gone with the bankers, you know. That's why we took time. We first bought technical guide and then the guidance note. We went to the RBI, we went to all the banks. They said it is good for you. It is good for the country. My whole thing is, if the country is to rise, we have to play a very, very important role. And again, if we are using these formats, our fees would rise, because we will say, okay, this is the financial statement format, kindly prepare. They will say, okay, sorry, I won't be able to prepare. Okay, so we will get it prepared, extra fee. No, very fine, na? Why not? Is there any issue in getting fees in Chennai? I'll tell you one thing. Our profession is based upon the 3 important words since 1949. Independence, integrity and excellence. Integrity I don't doubt at all. Till date, integrity is exceptional. The only thing which we have to improve is the thought process over independence and excellence. These sessions are towards excellence and independence. Please stop saying that we are doubting our independence because we are taking the clients and charging the fee from them. We are selecting our clients and they are paying us the fee, so independence issue is there. You know, this whole country, when they thought who would be looking into the financial compliances of the country, they thought chartered accountants are the best because they are independent, their integrity is beyond doubt and they are excellent. If we start doubting our independence, the whole thing would go hayward. That's why we need to qualify wherever they are not complying. Tell them to comply, if not then there is no option but to qualify. Still charging a fees with them. Government said we are giving you this work because we feel that you can do it. If you say I cannot do it, okay, then we will consider. They have already considered for GST, for the tax audit. So thought is ours. No, we have to remain independent. We think that we are getting the work. The fact is, if the regulations stop it, clients will not come to us. There are part-time, there are so many other professionals. I am using the word, sorry, part-time accountant, but there could be several other persons who say, okay, we are going to a CA, what he does, I can do it. Half. I don't want to quote the percentage, but yes. So we have to tell that there is a difference, and it would be through our work. nothing else please, right? So please use these formats. Everyone knows about these formats. I am not going deep dive into these formats. It is same as schedule 3. Any question we can surely ask, right? Profit loss again same. Even for NPOs, trust and societies, we have brought these formats. And I'll request that you should again try and follow this. Unrestricted fund, restricted fund. Suppose there is no restricted funds in your trusts. Remove that line item or the column whole. But follow this current year, previous year. Again, this is the income expenditure. Unrestricted, restricted. If there is no restricted funds, remove. Sometimes we feel that more and more changes are there, more and more complexity is there. If everything is made simple, then there is no requirement of a professional. The AI computers, the less knowledgeable persons, everyone can do it. We are there only when there are certain changes. Yes, sir. Companies Act. Other than companies. Because section 25 companies, schedule 3, division 1. Yeah. Yes, please. Certain donations we get as a restricted, that this is restricted, you have to spend only on this. Those would be under restricted funds. Huh? No, corpus is not restricted. Corpus is general. Restricted, suppose you are given a CSR to spend upon a specific project. That. Yeah. Yes. Yeah. No. That trust cannot accept any donation. It can accept a donation but cannot spend upon an application which is against its object. The restricted, I am telling. Suppose it is for your object. Suppose you are doing an object of distributing food, right, all over Tamil Nadu. I give you a donation of say 1 crore rupees. Say this donation is for food only for the purpose, because you are having food, clothes and everything. I say only food at Bengaluru. Then that I am restricting that application. That's it. Right? Tell. To the extent applicable. If there is a commercial transaction, only then none of them would be applicable. Na? These formats. Yeah. Sometimes you give a donation without any purpose, you give for whatever reason, for your own objects. Donation, that's all, unrestricted. If it is given without any restriction, that this is a donation you use for all your objects, that is unrestricted. When I receive the money, it is with no restriction. So the application would be without restriction.
No, I'm not asking about that. My question is, how will I this amount generally for towards education they spend so much of money, towards medical they spend.
So there is a format where we say charitable activities. It is there. If I talk about here, in this detail we go na, donation, contributions paid, employee benefit, then we got other charitable, religious in that schedule. And for all this I am telling you, proprietorship, partnership, LLP, trusts, the Excel formats are there on the ASB website. Just download from there. We have created, yes, whole line items. Yes, we have created the Excel formats because of that. Just told that na. If I have given a donation for the specific restricted item, not corpus. Corpus is for general. Restricted, that you have to do only this for with my fund. That is restricted. Okay. In case of sole proprietorship, there are certain penalties. For example, say a challan is cut and you have paid through the proprietorship book, or some other incomes are there which you put in the proprietor's account. So you put that into capital account or put through profit loss? Capital account. Capital account. So my question out here, there is a concept of capital and revenue. There is a concept of capital nature and revenue nature. So anything which is of capital nature will go into capital account. Can the revenue nature can go to the capital account? I am not talking about income tax. My financial statements are true and fair. My financial statements are true and fair. So in my business, suppose there is a GST penalty that goes into capital account. Sometimes they people put it, the reason I am telling you, for example, you say my car expenses 25% I disallow as a personal expense. I take that to the capital account. Why? Is that revenue nature, capital nature? Only that is a personal nature, na? You have to adjust that through the computation. How my financial statement is true and true, that my revenue item has gone to the capital. How can my revenue nature of expenditure can go to the capital account? Is it a drawing? Actually, is it a drawing? My penalties are not drawing. Actually what happens, through our mindset we want whatever is there in the profit loss, we need not make any adjustment in the computation of income, and profit as per profit loss account, that is my taxable income. So no adjustment. But the fact is we need to understand and appreciate, because many a times I have seen this happening even in the case of companies. There is a capital gain or loss. That gain or loss, to avoid that, goes to the general reserve, goes to the capital account. In the proprietorship partnership also. No, it has to go through profit loss account. Everything, then you put all incomes, all expenditures to the capital account, everything will net go to the capital account only. Will not go. So, we make a in your business accounts. Personal books are separate, but in my business, suppose I have got a car, or I have got one car and there is no 15% other asset. So there is a profit loss thereon. The profit loss I have to route it through profit loss, not to the capital account. Basic thing I am talking about. You know, these things we have to tell, no, then my capital revenue mismatch is there. So true and fair is not there. So many standards are there, right? Chali, next. In the case of proprietorship partnerships, do we give the list of trade receivables, trade payables, unsecured loans, proprietorship partnerships? We give. No, as a list attached we give, na. Proprietorship partnership, give, na. In companies do we give? In companies do we give? So here why do you give? Of course not necessary, but you know, it is in our habit. What is mandatory, that we will not do. That is not required, we will take extra responsibility. What I am trying to say, it is not mandatory, we don't do it for companies. You take that signed from the client, assessee, keep in your records, but no requirement to attach. So if you stop doing it, so kindly take care, the thing which we are writing in the financial statements, as per annexure, as per it is attached, remove that also. Because we are in the habit of writing that. So copy paste. So please, your choice, if you want to give, But if you are removing it, remove those wordings also. Right? Yes. Notes to accounts, of course, we have discussed a lot upon that. Right. अब आ जाइए. हाँ. And of course, significant accounting policies. Here in the case of proprietorship partnerships also, those accounting policies which the entity is to comply, we have to give all, not only the few, all please. For example, borrowing cost, most of the proprietorship partnerships borrow, so there is a disclosure required as per AS 16 borrowing cost, please give that, there is a requirement. It should not be that way also, that you, what happens, you prepare a whole list of accounting, significant accounting policies, and whether it is applicable to them or not, you attach the whole. There are no figures set, but you have got a policy. There is no foreign exchange, you have got a policy for the foreign exchange. Nothing excess, please. Right? MSMED Act, mandatory since 2006. There are 6 items to be disclosed in the notes to the accounts. That what are the principal payments, interest not paid. Kindly disclose that. That is mandatory since year 2006. Please start doing that. Right? You know, I added this slide last night. What happens, we take our own call when to recognize a liability, when to de-recognize, or we write off the liability. Whenever we feel, okay, my profit is less, write it off. I keep it. But our framework, there is a beautiful document which I referred earlier, where the previous year's figures are mandatory. The framework for preparation and presentation of financial statements. A beautiful document. If you don't find anything into the accounting standards, just refer that. It is a plain English. And it contains that when can you de-recognize the liability, either if it is payment by cash, or transfer of other asset, or provision of services, or replacement of that obligation with another, or conversion to equity, or the creditor is waiving or forfeiting his right. In no other case you can de-recognize the liability. We are doing at our own wishes. And sometimes when we say payment made by cash, we see in the financial statements book overdraft. My bank balance is not there. I issue extra checks. And then there is my BRC, bank reconciliation statement. So please take care, at least that much bank balance has to be there. Actually, problem is only with for the auditor. There is no problem with the assessee, with the client. He says, whatever I have done, client has said true and fair. Auditor has said true and fair. I don't know the law. He knows the law. He is specialized into that. And he is saying everything is fine. So the whole risk is upon the auditor only. Right? So please take care. Now this accounting standard applicability, if I talk about, this is a chart where I have given which standards are applicable to whom, companies and non-companies both. Now accounting policies we have already discussed, that whatever is their significant accounting policies applicable to their transactions, give their relevant disclosures. Let us talk about valuation of inventories. Applicable to all. Now valuation of inventories in the case of say proprietorship partnerships, in the financial statement balance sheet, do we give total figure closing stock? Yes? Closing stock, whatever it may be, we write something as certified by proprietor, management. We write now, cash as certified by the management. Who is preparing the financial statement? So when I am preparing my financial statement, why will I write as certified by management? Why will I write? So theoretically remove those lines, have the MRL, right? So inventories, single figure not allowed. You have to disclose which is there. In the case of manufacturing, raw material, WIP, finished goods stores. In the case of trading concerns, stock in trade. The word is stock in trade. and this is as per my AS2, this is as per ICDS2, both. Now, how is the closing stock figure arrived at? Practically, GP कितना profit रखना है, right? I'm not denying that. But now we have to document that. So now you have arrived, first of all it should not be a round figure 50 lakhs, 45 lakhs, right? So you have arrived at a figure. Now for that, the valuation sheet do you have in your records? Valuation sheet means closing stock item wise. You need to have it. Arrived at a figure, fine. But what is, because they are maintaining stock records or not, you may say not record, then how? It's through physical verification. Fine. Document that, but have that valuation sheet now. And what is the policy we write for the valuation of inventories? Cost or market price, or whichever is less. The exact word is cost or net realizable value, whichever is less. Fine. And it has to be FIFO or weighted average or whatever the method is, cost arrived at this. Now when we are having that valuation sheet, those who are having quantity, cost and NRV, are we having that? Then how did you compare the cost and NRV? How did the auditor say yes, they are saying at lower of cost and NRV, and they have compared it? Finalize the financial statements, but don't issue an audit report unless they give you that valuation statement. You need to have that in record. It should not be that the last sale was made in the month of February. In March, the purchase was 20 lakhs. Your closing stock is 10 lakhs. No, so that diligence has to be there. The huge thing is inventories. They are showing inventories whether they have that go down to keep so much of stocks or not.
In some cases they submit the stock statement to the bank or
So kindly see that whether they have that detail, that much of space or not. Required due diligence on few items. Inventories, my AS, they are saying at lower of cost and NRV. They may be sending the valuation at market price, but in the financial statement it has to be lower of that, and for that you need to have that statement, get it signed from them. I should have it. Fine, I am not saying the initial arriving how it was, but for my documentation, for my safety, for the client safety, client will also need it later. He may today resist, but tomorrow he will be thanking you a lot. You have to give those value addition. That is a requirement of the my AS and everything, right? Cash flow, of course, for the MSME it is not required. Depreciation AS6 has been omitted since 2016. How many of us out here, chartered accountants, are following accrual system of accounting? All? For your own accounts? Accrual. I congratulate everyone because I follow cash. I don't have money to pay without getting the fees. That is not accrual. That is not accrual. Now, all those who are following accrual system, there is a concept of percentage of completion method. So I am very sure that being a chartered accountant, at the year end you are arriving at how much the percentage of work has been completed for the ongoing work, like income tax cases, GST cases, TDS returns, those we have not billed, but work of 10%, 20% have been done. So you all must be billing, having that unbilled revenue. So we want to say the chartered accountant's own books are not true and fair. If you are following accrual system, there is a percentage of completion method now. How much work you have done, at least that you have to keep at unbilled revenue. I am just telling you because we are chartered accountants, we understand our own accounts. This is there for all service industries. So if we are not taking care in our own accounts, how we are taking care in our clients' books? Those are following accrual, yeah.
the practical problem.
Then follow cash.
No, once we start this unbilled revenue, I'm talking about every service sector. Once we account unbilled revenue, there is a GST turnover reconciliation, sir, which is a very big headache to explain the GST.
Okay, I'll ask one question. I have got my branch at 4 states. So I make sales to each branch, inter-branch. So I put my total turnover, including sales made from each one branch to another branch. Yeah.
Income tax we don't do.
I am talking about financial statements.
Yeah, we don't do.
Why? Then you have to give a reconciliation.
Sir, but this reconciliation
You give it or not?
document, sir.
Are sir, you give it or not? So here also you can give, there is a line item in GST return. I don't do GST, but I have discussed this several times at so many places. There is a line item for unbilled revenue. So reconciliation is required in GST in so many cases.
More than 5 crores.
A1 and ITR, it is there at the year end. It is there in the, this is recognized at the year end.
Correct, sir, but when what happens prima facie, you will definitely get a notice where there is unbilled revenue. Your
So
income tax
you know,
turnover-
I have been talking about this first of all, I am talking about this. Many people say AI has come, everything would be digitized, there would be auditing going off. Mega, please believe on the bureaucracy. They will give you work. So if they will issue,
Sir, it's for my own gain.
so you don't get the revenue.
No, this is no. What I'm saying is,
Your clients also, na?
for an unbilled revenue, the GST department is going to raise a query on me. That is a
So you'll
acceptable work.
So you can give it to her, na? Please understand few things. Just because of income tax and GST, I cannot change my accounting system, please. I cannot change. I cannot change. The right way, then what will Infosys do? Well, what will all software companies do? Everyone is having unbilled revenue. All construction companies are having unbilled revenue. Are they not facing?
Less than 1 crore, why should I talk about all that?
Then there is no audit required, na? Then no audit required, then what is, you can do whatever you want, na? I am talking about those who are getting audited and the chartered accountants are giving the report of true and fair. But if you have to grow, then you have to see the compliances. Then we should never say, I am not getting work, there is issue, I am very happy what I am doing. But if you want to improve, improve. And this is the one of the problems, that when we take certain documentations, we take from certain clients. Are we taking engagement letters? All clients? Proprietorship, partnerships? Huh? What? I'll give you a very small example. Then you take a call. I always say, take a call. And this is an anecdote, a real anecdote. I met a CA few years ago, maybe 3 to 4 years ago, in northern India. He said that client came to him and he said, okay, file my ITR. I'm talking about income tax return. He said, okay, I'm a diligent chartered accountant. Give me your details, I'll file the ITR. He said, okay, I want to file into 44 AD. Like, this is my turnover, show 8%. He said, no. He said, chartered accountant said, give me your bank statements. Why it is required? No, I file, I want that bank statement. So he gave the bank statement. He said, okay, explain the credit entries. He said, this is loan, this is some amount written back. I said, no. If you are giving me the documents, otherwise I will total all and then show it as a revenue. He said, okay, do it. So he made all the credit entries, totaled it, declared that as a turnover, 8% profit thereof, he filed the ITR. The case came into scrutiny. And in the scrutiny, what happened? His turnover was actually much more than that. And there was an addition made by the department. That client made a case against the chartered accountant. Real. That he has filed this return and he has not filed correctly. So it was asked to the chartered accountant, did you file? I just filed. Data is this, I just filed. We'll also say that only, na? No, ITR filing. ITR filing. But assistant is under me, na? So, but not, what do we say? Actually, we say, I only filed it, na? But what do we say? I only filed now. You are an exclusion. I am talking about general, right? So if I am the police inspector and you say, okay, I just filed, I say, you have filed, come in. Because we have that thought process, everything is done, what is being done, I do. I am supreme. Assessee client does nothing. I file the ITR, I file the GST return, I incorporate the company. But the fact is, you are right, I only assist. I don't file. Please keep that in mind. And that's why obtain engagement letter for each and everything, even filing of, even assisting in preparation of computation, ITR, GST return. Have an engagement letter now. Who is stopping you? For my safety, only I have to do, no one else now. You know, here also there must be several doctors. Some say okay, 100 rupees consultancy and medicine, both. Some say 300 rupees only consultancy. Then some say 1000 rupees consultancy, but outside there is a system. You please get your height, weight, temperature, everything checked and then come to me. Those have got the systems. We should have our systems. Get an ITR engagement letter signed, GST return engagement letter signed, where everything is written that he is owning that responsibility, he is signing. I have prepared those engagement letters. The drafts are there, you can take it from the portal, I will tell you. ITR, GST return, tax audit, all engagement letters are there. Just put in your office that whosoever is filing, even we put it if the digital signatures are kept in our office, he has kept it for his own use. We should have something signed from him. Right? So put the responsibility, it is our safety. So if we have those systems, only then we could be safe. Right? I'll be sharing that. So revenue recognition, please, those who are following accrual system, please take care of the percentage of completion method. Right? I'm just giving one of the examples of non-compliance. Yeah.
Just because of MRL, that you say
It is an engagement letter first of all. What is your scope? It defines your scope. And just not MRL, engagement letter, MRL separate, then your work. You have to justify with all those. Not anything and having something you can fight. Not having anything, no one can help you. Neither the institute, nor the NAFRA, no one else. Right? And we have to create that habit. If I take from some and some not, then my office system goes like that. From this I have to take, from this I will not to take. Take from everyone. Even what you are doing philanthropic work. You are not charging voluntary work. Engagement letter is mandatory. And it helps because it also gives what is the fees to be charged, decided in advance. It gives the amount what is to be charged. So it helps us. It helps us, right? Every ITR, GST once for whole year. Every engagement, sir, it is my standard. So every time you go to a doctor, every time my system, if I keep my office on a system based, everything would be fine. And sometimes no, they say, okay, this auditor, he asked for so many papers, he is a big auditor. So become big now. Become big. Who's stopping? Right? Correct. Now, let us take, do you have any clients who are having immovable property on which rent is being received? Yes? In your books of accounts? In the business books of accounts. So how is it classified? Is it classified as PPE? I am not talking about income, I am talking about the asset. The asset is classified as fixed asset PPE. I am talking about proprietorship, partnership companies, all. Fixed assets. Investment, fixed assets. Majority is fixed assets PPE. But the right is, if that asset is kept for the purpose of appreciation or rental lease, it is not a fixed asset PPE, it is investment property. Your classification is wrong, please correct it. Now, that leased property, is the depreciation allowed under income tax? No? No. So in the books, do you charge depreciation? Books you charge? No, I have got a freehold property. I have given it on release. I have given it on release. It is my investment property. Not charging in the books. Not charging in the books. The legal requirement is you have to charge in the books. The legal requirement is AS 10 read with AS 13. Classified as my investment in property, and depreciation is to be charged. In computation you will adjust, because under income tax depreciation is not allowable. So adjustment would be. Income tax is separate. My books are separate, true and fair. Huh? Karna padega, varna you say it is not in compliance with the AS. It is not true and fair. You are keeping that asset at that same value. How it is true and fair? Standards are there to reflect the true and fair view. Qualify AS 10 is not being complied with. Qualify that AS 10 is not been complied with. Simple. You provide in your that part para 3A of 3CB. AS 10 is not been complied with. They are following ICDS. Right that.
Why not in 5A, sir?
Huh?
Why not in 5?
5 is 3CD. My true and fair financial statements. Financial statements are reflecting true and fair, na? Financial statement. Acha, suppose there is a commercial complex here in Chennai, and there is a unit which you purchase or your client purchase and use for the business. So suppose you purchased it for 2 crores. Purchased it and using for the business. So PPE. So on that 2 crores, depreciation is allowable. You charge on 2 crore. Please don't go into mind. Whatever is practical, tell. You charge on 2 crores. So when you purchase that flat, you know the value?
Rental value as per that you bifurcate.
You bifurcate. Everyone does so? You do separate? So you reduce that? So land is separate, building is separate, even for a flat. Right? Good. The only branch, only place SIRC where majority are doing it. I have traveled to the whole of the country. Majority are not doing, only some are doing. Here majority is doing. Yes, in case of a flat purchase, unit purchase, land value separate, building value separate, depreciation only on building value, not land. Those who are not doing, finally start doing it.
In Tamil Nadu, we had to separate agreement also. For UJ separate.
So that's why. That's great.
No, but we are facing.
No, why difficulty?
Registration.
Registration we are talking about only auditors. Okay, in case of proprietorship partnerships, do we provide for the gratuity? Kyun? AS 15 is not applicable to proprietorship partnership? Applicable hai na? Then why we are not providing? How it is true and fair? How it is true and fair? Depends, sir. If there is ES and PF, the amount could be significant after some time. How you can say it is not significant? Hardly matters, sir. I am telling you, sir, it is not about that. You are the auditor, true and fair view. It is in the year of service rendered. How can you assume that he will terminate as an auditor?
You know the owner's perspective.
Sir, past experience cannot be that. For that there is actuarial to understand how it is the attrition rate, not the auditor. See, in companies it is mandatory to get the actuarial done. In case of proprietorship partnership, with this change from this year onwards, the employee gratuity is to be provided, but less than 250 crores turnover, actual is not required, but gratuity provision is required. Figure simple, sir. You provide in the best possible way, total number of employees, then use the gratuity law, number of years of service provided, 1 year, 2 year, 3 year, into 15 divided by 26. Article chip time mein pada tha. Right? But gratuity provision is a must. For MSMEs, actuarial is not mandatory. For large entities, actuarial is mandatory. For companies and all cases, actual is mandatory. I am telling you, whatever cases are coming into FRRB where gratuity is not provided for, and in the accounting policy they have mentioned that the gratuity will be provided in the year when it is paid, because everything goes from income tax, GST, never mind, everything flows there. They say when we will pay, then we will provide for. Auditor says it is true and fair. They have mentioned in the accounting policy, but mentioning in the accounting policy a policy which is not correct will not make the accounting policy correct. Auditor role, if they are not providing, qualify. Very fine, but start giving qualifications without any other. If he is not providing for gratuity, he is taking a call. My role is to just qualify. Na, I am fine. He is fine.
Again, you should also say how much is the impact. What you might.
Yeah, for that, you have to ask him the employee's data, and if he is not giving, then you have to again mention. When we say that he has given us all the information, you have to say he has not given that information also. Then if he is not giving an information, then of course it will not be true and fair. Na? You have to mention that the information he has not given. In Companies Act also we say we have sought and received all the information. There you write we have sought but not received the information. Have an evidence of seeking that information. Write an email. I have sought, he has not given. Otherwise, if you have not even sought, then the onus would be casted upon you. I have to keep myself safe, and myself safe only through my documentation. And what, the moment I am telling all these things, in few seconds everyone understands what we are talking. Right? But a non-chartered accountant or a person who has not done his articleship seriously will not understand. So there is a difference between a CA and a non-CA. We have to just maintain that. Related party disclosures, MSME, and two standards, AS 1828. The applicability, I have said no with the star, because their applicability there is a change. MSME less than 250 crores turnover, but for related party and impairment of assets, the limits are different for these two standards. The limit there is 50 crores turnover and 10 crores borrowing. These two standards, right? All others same. In case of Indias, so hai nahi. Yeah, for them it is. SMC, non-SMC. In the case of listed, it would be always a non-SMC. So everything applicable. Yes, everything is applicable.
What do you mean when you say non-company large?
Where? There are non-companies which are listed. For example, OBC, Oriental Bank of Commerce. You talk about Indian Bank, you talked about State Bank of India. They are not companies. Are they companies? Are they registered under the Companies Act? No. Agreed, but I am accounting standard companies, non-companies. They have to comply with the accounting standard issued by ICI. So when they are listed, they have to comply. Yeah. Right? Sorry. The relaxations for MSME, AS 10 certain disclosures not required, AS 11 certain disclosures which were all encouraged on, not mandatory, they are not required. AS 15 employee benefit, already I have told you what is there. AS 19 certain disclosures not mandatory. Taxes on income. Do we provide current tax provision in my proprietorship partnerships? It is mandatory na, AS 22. Sir, we are chartered accountant. I'll tell you. Sir, we are all chartered accountants. You tell me how to do, I'll give solution for everything. Now I have got 5 heads of income. I have got all 5 heads. Fine. So I have computed all the heads. I have got the total income and the total tax thereon. Sir, you have to have the computation of income in front of you. How in companies you are providing provision for current tax? Sir, you have computation of income proposed. Let me complete then this. You have proposed computation of income. Here also you will have proposed computation of income. Now you have got the total income, the tax thereon. You derive the average rate of tax. On the business income, provide that percentage. Yeah, average rate of tax.
He does the audit, sir. I do the IT file.
From the assessee you have to ask. He may get it done from so many persons. He may get his ESIPF done from other person, GST from other person. I'll not go there now, I'll ask my assessee. You provide this. Don't issue the financial statement audit report unless he gives. Otherwise qualify. I am bound now, I am an auditor. What can I do? My hands are tied. Everyone says, the businessman says, the government says you are not doing well. I want to do well. So we have to someone say na, sir kya kare? You only tell us na, you are not doing well. We are doing na. The government says, so you have only told us na, so we are doing it. Right. AS 18 and 28, the limits are different. Turnover less than 50 crores because all are MSME 250 crores and 50 crores. Here above 50 crores, related party and impairment, both standards are applicable. And related party, we should keep in our mind, related party are defined differently in the different acts. If I talk about the accounting standards, AS 18, if I talk about Companies Act section 2 subsection 26, which is for which it is section 184 and 188, and income tax 48(2)(b). We have seen in my taxation audit quality review board that in 48(2)(b) we refer to my notes to the accounts, AS 18. Not correct. For notes to accounts, AS 18. For 188 and 184 section 2 subsection 76, not AS 18. And 48(2)(b) itself. Neither the Companies Act nor that. Right? So I have to be better careful. Going to my last few slides, cash system of accounting. There was so many issues which were going on. So for cash system of accounting, our institute used to say accounting standard applicable to, there was a circular in 1991, something like that. Yes, they are applicable to the extent applicable. So when I was made the chair of the board, actually I saw everything concentration on Ind AS, but I wanted that my small and medium enterprises and practitioners, they should all grow, and they will grow only when they improve upon these compliances, so that they are ready for the new bigger assignments. So we have to do this starting, and then of course we can anytime go on the higher side. So we brought a technical guide on cash system of accounting. And what is the cash system? Everyone knows. AS1 is accrual system, mandatory. And if you are not following an accrual system, 1991 ICI announcement, in cases where the statute governing the enterprise requires the preparation and presentation of financial statements on accrual basis, but they are not so prepared, auditor should qualify his report. When it is required to prepare an accrual and not following, then then qualify. But if there is no requirement to file accrual basis, then he should not qualify, but mention in his audit report that this policy of the enterprise to prepare on cash basis, receipt cash basis, it will not be not true and fair use. This paragraph you have to put in your auditor's report, and in the notes to accounts mention it is following cash system of accounting. Certain examples of cash system: revenue, we have mentioned in case revenue has not been received in the cash, but TDS is made. Now suppose companies, they follow accrual system of accounting. 5 lakh rupees is the audit fees. They deduct TDS of 50,000, but the fee is received in the next year. So what this guidance, technical guidance say, recognize that 50,000 because that amount has been received by you. TDS deducted is income received. 50,000 revenue, 50,000 TDS. This
the gross amount has to be.
you will have to explain cash system of accounting. Cash system is this na. So you get a scrutiny now. That is accrual system. That is accrual system na. You are following accrual system na. You are following the accrual system na. Cash system. Now give me just one example. Client has deducted this 50,000. You have not declared as an income and he doesn't pay the balance amount. So that 50,000 goes na.
No, we are not paying.
Not paying means I am not getting.
We are not claimed us.
So 50,000 waste. I am not talking about claim. I always talk about auditor. Auditor TDS was deducted of 50,000. He is not able to claim its refund because he did not get the balance 4,50,000. So he is there at money lost forever. Out of 5 lakhs he got 50,000 at TDS na. Cash system is money received. He paid into my account. That money is with the government.
50,000 income I cannot. Can I claim 50,000 TDS?
I just said yes.
Then GST sir on 50,000.
Pay on that GST 50,000. You have received it. Yeah, GST. I don't do GST, but I have heard that on advance also you have to pay GST. So I am just telling you, this is there in the technical guide. Even the department and all others who are looking into cash system accounting, they will be looking into this technical guide. So this is for our benefit. Another thing, borrowing. We observed that lot of entities who are following cash system accounting, they take loans. When they take loans, borrowings, they have to pay the interest, their HUF and so many other. So instead of paying, they accrue it. Cash system, no accruing. Issue the check by 31st March. Otherwise it is not cash, not allowable. Very rightly said. Partners interest and partners capital, there are income tax judgment that in a cash basis that would be allowed. So those controversial items we have not covered out here, but that is allowed if you credit in your partners capital account. Please sir.
Car number WB74AS8263. Please remove your vehicle. There is a VIP vehicle that is going to move.
We are closing in next 5-10 minutes. Right. So please take care in the case of this. Yeah.
Coming to this particular same example, when you say that it's credited to the capital asset, it is paid
For partners.
for the interest also.
For partners only. For only partners. Income tax, there is certain judgments. If I am on the part of department, I can still fight, it is not allowed. So don't risk that. If you pay, it is very good. If you pay, it is.
We don't know the value, sir, how much salary we can withdraw, because based on the percentage 90 and 60.
Don't worry, 194T is coming from this year. So they will make us comply. Don't worry. Right. Then depreciation we have specifically mentioned that yes, to reflect the true value of the financial statement, depreciation though not on cash basis should be allowed under the cash system of accounting. We have tried and taken that whatever care we could have done. Inventories, in case it is a trading concern, valuing it at lower cost and net realizable value should be recognized. Taxes, whatever you have paid additionally and you feel that the refund would be received, that amount is with the department, you can recognize that as that. But if you feel that it is not, then you have to expense it off. Expense it off. Normally sometimes we take it to the capital account. No, but profit loss account. Profit loss account. This is one of the portals, expertspanel.in. Anyone can log in. It is free of cost. You register free of cost and then ask question on any subject. The answer would come on your email ID. More than 37,000 answers have already been given. It is all category wise: income tax, GST, company law, and the I said the engagement letters. You go on the search upper, there is a search column. In the articles you write engagement letters version 2, you will get those. So I have shared a lot of my documents, tax audit series and others, and other experts are also there. So their videos, their articles, their presentations, all are there. So you can use anyone. And also this presentation I will upload on this portal lonavat.com. There is a mobile app, both Experts Panel as well as Lonavat. Anyone can download and use this. This will contain all the notifications also and this presentation also. So any questions? I am there on the LinkedIn and X, Twitter. So anyone can try and accompany me out there. Any questions, I am all there. Thank you very much for your very patient hearing and making the session so interactive. Thanks a lot. Thank you.
Thank you, Pramod Bhai, for this scintillating lecture. When I was just standing outside, one gentleman, one chartered accountant member walked out just few minutes before, and he said that it's an excellent session and we only hope that such sessions are conducted often. So we would request you to please come to Southern region often. And this afternoon when I was talking to him, I said, sir, we will go to the entire, at least state of Tamil Nadu. I can guarantee you we will go around and present these topics which is required very much. Because since he is from the northern region and the northern region member of Central Council, Charanjot Singh Nanda, is becoming the president. So at least he will be free for 1 year for all these activities. So thank you very much, sir. May I now request, any questions is there? Any member who has not asked? Yes, Sunil Jain.
Entity is not registered and for delayed payment should be made. Delayed payment.
Entity is not registered MSME.
It is not about the entity registration, but it is the registration of the suppliers.
Supplier.
Then the act is not applicable. Act is not applicable.
Any questions? Okay, till such time you think, may I request Sangeeta, chartered accountant who is seated in the extreme last, to please walk in the front and please present a token of our love and affection, a memento to CA Pramod Jain Sahab.
Fire Board Bishop.